If you truly want to see success in the markets, but constantly find yourself getting stopped out on the wrong side of a trade, chances are you don't understand market structure. Until you understand how price moves in the markets, you're not going to be able to make consistent profits. So in today's video, I'm going to break down my 3 core principles of market structure to help you guys become profitable traders. So we're going to be talking about market structure today, why it's so important to understand market structure, how to identify market structure, and how you can use it to make money in the markets. So as you can see right here, what I have is my 3 core principles to understanding market structure. Number 1, the first thing that we want to look for is identifying trends in the markets. So the basics of market structure is being able to identify trends. If we're in an uptrend, if we're in a downtrend, if we're consolidating, this is the basics of market structure, is being able to identify these trends on the higher time frames. Next, what we're going to be looking for is determining the difference between a fake out versus a continuation. A lot of times, the setups look fairly similar, especially on the lower time frames, but there's a key difference between a fake out versus a continuation, and I'm going to talk about it a little bit deeper later in this video. And then finally, what I have is understanding the difference between micro and macro trends in the markets. There's differences between a macro uptrend with a micro downtrend. That's what we're going to be talking about, and why it's important to identify the difference between macro and micro trends in the markets and how we can use them to make money. So now let's go on to identifying trends in the markets. So as you can see right here, what we have is basic market structure. So in this case, on the left-hand side, what we're creating is higher highs, higher lows, higher highs, higher lows, and we're continuing towards the upside. So this is what's called an uptrend. And whenever we break above this key level, this is what's called a break of structure. So a break of structure occurs in the direction of the trend. So every single time it breaks above this key swing high, this is a break of structure towards the upside. And once again, once we break above this key swing high, what we have is called a break of structure. So when price is continuing to make higher lows in the market, this is when we know when we're in a clear uptrend, versus when we're on the right hand side where price is making lower highs, lower lows, lower highs, lower lows, lower highs, and we're continuing towards the downside. In this case, what we have is breaks of structure towards the downside. In this case, the trend is towards the downside. So every single time it breaks below this key swing low, right, what we have is a break of structure continuing the trend towards the downside. So in this case, we're making lower highs, right, lower lows, and lower highs, and we're continuing towards the downside. So clearly you can see on the left hand side what we have is a clear uptrend in the market, and on the right hand side we have a clear downtrend in the market. And of course, right, this is the basics of market structure. And you might be asking, price doesn't always look this clean, and you are correct. So you can see the reality of market structure is that price is not always going to be super clear. So you'll see that price is not always in a clear trend towards the upside or downside. And this right here is usually the reality of market structure. It's not always going to be the cleanest on the higher time frames. So let's break it down and see exactly what we're looking at. So you can see right here, what we have is a clear trend towards the upside. We have higher highs, higher lows, where we're breaking structure. This is a clear trend towards the upside. We have a break of structure. We're creating a new high. We have another low put in, and now you can see right here, we make a lower high. So we make a lower high right here, and then what we have is price is technically breaking underneath this swing low. So we break underneath this swing low, but you can see price is still bullish on the higher time frames because we're still making this higher low off this key pivot point. So you can see that price, as long as we maintain above this key area, we're still in what's called a bullish uptrend. So we're still in a bullish uptrend, and you can see price, we finally break structure back towards the upside right here. This right here is what's called our break of structure. You can see price, we make a new high, where we're creating these higher lows, where we're building up towards the upside. Similar thing once again, price breaks underneath this key swing low right here, but you can see that price is still holding our higher low key pivot areas. So you can see price creates a double bottom, right, in an uptrend. Double bottoms are very bullish, and we're continuing towards the upside. You have another break of structure back towards the highs, and we finally make a new high. In this case, price pushes towards the downside, right? We're still very much in a bullish uptrend. all the way up until the end where we break underneath this key low right here. Once we break underneath this key low, which is your double bottom, this is now what's called a change of character. Right, so every single time before, when we're having these mini breaks of structure towards the downside, we're still in a very clear uptrend. But in this case, we finally break underneath this double bottom, which signifies that price is starting to head in a potential downtrend. So now this is what's called a change of character. Breaks of structures are continuations of trends. Changes of characters are a break of a trend. So in this case, price breaks underneath this double bottom. So now what we can see is a potential downtrend in the overall markets. So let's go on to the next slide. The next slide I want to talk about is strong versus weak structure. As I mentioned in the last slide, sometimes structure is not always perfect, but how can we identify strong structure versus weak structure? In this case, what we have is strong structure on the left. So in this case, what we have is a clear uptrend once again. Clear uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, right? This is what's called strong structure. When price is using these key previous resistance turn into support levels and we're holding these key areas, this is by far the most bullish. Or vice versa towards the downside, when price is using those support levels turn into resistance, that's when we have strong structure towards the downside. And you can see once price right here, we break structure towards the downside, right? We're still in an uptrend, as we can see right here. We're still in this uptrend because we're making a higher low off this area. As you can see right here, price fails to make a new high, right? Price fails to make a new high. And now you can see what we're having is a lot of internal liquidity, right? Price is breaking above the high, right? Taking out the liquidity, just coming back inside the range. Not really too much displacement. We're just coming back. We're still in an uptrend, but we're slowly making its way towards the upside. And that's not what we like to see when we look to trade. What we look for is strong structure. We like to see displacement where price has a nice push above the swing high key pivot point. If price breaks above the swing high, but quickly reject, that's potentially what's called a fake out, which I'm going to talk about next as well. And right here, this is going to be the difference between a fake out and continuation. So you can see price moving towards the upside, higher highs, higher lows, higher highs, higher lows. We end up using this area as a retest. Price breaks above this swing high, but fails to have a candle closure, fails to displace above this level. We reject, sellers start stepping into the market, and now we take price towards the downside. Whereas on the right-hand side, what we have is continuation, where price is making higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. And we're holding these key areas of break and retest. And you might be asking, how do we determine the difference between a fake out where it goes to take out liquidity versus continuation where we have markets holding key areas in the trend of the overall market? As you can see right here, the main thing is understanding the higher time frames. So you can see the higher time frames in this case is bearish. We're making a lower high, lower lows, lower highs, lower lows, lower highs, lower lows. In this case, what we have is a mini uptrend. So now you can see price, we push back towards the upside. We finally have our change of character, a break of structure, and now we have our retest. So as you can see right here, this is now a miniature level of resistance turning into support. This might look like a super solid buying opportunity on the overall market, but you can see if we are going to look to buy in this area, what happens? Price has that push up, we take this swing high out, but what happens? We sharply reject off this area and we end up continuing towards the downside. The reason being is because you can see the overall higher time frames. Price is really just returning back into this higher time frame break and retest level. Your previous support really acting as resistance, and you can see this would actually be a really solid area where you should be looking to take a sell position towards the downside. So you can see in this case we have a lower time frame break and retest, but the higher time frame is bearish. So if we don't understand the higher time frames, it's going to make it very difficult for us to trade in the markets. And now you can see the exact same thing, but now this is a continuation, right? The difference between the two is that in this case, right, the higher time frames is bullish. As you can see right here, we're creating an uptrend where we're creating higher highs, higher lows. As you can see, right, we're creating this double bottom in an uptrend. And price in this case is using these key areas of break and retest. You can see price where we're coming back into key areas of break and retest. Another swing high made using this area as support for that continued push back towards the upside. And the reason why we have continuation is because the higher time frame is bullish. These dips are most likely going to get bought up because we're in an uptrend. If we're in an uptrend, we can expect every dip to get bought up and create higher lows in the markets. If we're in a downtrend, we can expect most pops to get sold to create a downtrend. So as long as we understand the trend of the markets, we can capture either the upside or the downside. We don't have to worry about if price is trending towards the upside or the downside. As long as there's a trend in the markets, we're looking to capture a move within the trend of the market. So now let's go on to micro and macro trends. So now let's look at micro and macro trends. As you can see right here, we have another clear uptrend in the markets. We're creating higher highs, higher lows, higher highs, higher lows. What we're going to be looking for is this previous swing high to now be used as support for that continued push back towards the highs. So you can see in this case, what we have is a 1 hour chart. And on the right hand side, what we have is a 5-minute chart. So you can see I have this color coded here in red. This is the mini downtrend. So you can see in this case, what we have is a macro uptrend where we're creating higher highs, higher lows. We're continuing towards the upside. But what we have is this leg in price right here, which is color coded in red. So this is on the 1 hour time frame. On the right hand side, if we're having a pullback on the 1 hour time frame, what this is going to look like is a downtrend on the lower time frames on the 5-minute or the 1-minute. So you can see in this case where we're creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and we're coming back into key areas being that higher time frame point of interest. So you can see the blue line will be your key level of resistance turned into support on the higher time frames. So this is the area we're going to be looking for potential reversals in price. When price taps back into our higher time frame break and retest level, we're now going to look for signs that price is going to flip back bullish on the lower time frames. So we know that the higher time frames is bullish and we have a mini downtrend on the lower time frames. We're going to look for a change of character on the lower time frames to now flip back bullish. So you can see in this case price, we have that change of character as you can see right here in price. When price breaks back above this swing high, price now flips back bullish. And now what we're going to be looking for is any sort of key areas for that continued push back towards the upside. So this is basically what my model looks like, right? Once we break structure, as you can see right here, we're going to be looking to trade price back up in towards our key areas, risking off this key swing low. So on the higher time frames, what it will look like is this nice break and retest on the higher time frames with a stop just to break underneath this key area. So essentially what my strategy is looking for these macro uptrends, and I'm looking for micro downtrends to flip back bullish. So I start having a micro uptrend in a macro uptrend, and that's when everything starts aligning and I can look to target those higher time frame key levels. So now let's put this all together and go look at some examples in real time. So right here, you can see that we're on SPY and we're going to analyze the market structure on the higher time frames. And then we're going to go into the lower time frame to see how I trade this in real time. What you can see right here is that we're in a clear downtrend in the overall markets on SPY, creating lower lows, lower highs, lower lows, lower highs, lower lows, and we're continuing towards the downside. So in this case, the key level for SPY is going to be this key area right here, right? This is your change of character level, your previous support turned into resistance. If SPY can break back above this key area, then we can look for a potential move back towards the highs, towards your key levels, towards the upside. So now let's play out the tape on the higher time frames. So you can see right here on the overall market, price is no longer bearish. We reclaimed this key area on SPY. We're no longer bearish, and now we're going to be looking for that continued push back towards the upside. So now you can see we have that big push coming into pre-market. We have a clear uptrend. We broke structure back towards the upside. We're above our key swing high pivot point now. So what are we going to be looking for? This was our original swing high pivot point. Now we're going to be using this area as potential support for that continued move back towards the upside. So now we can play the tape coming to market open. So you can see right here coming into market open, we're very much bullish. So we're bullish now on the higher time frames. We're in a very much clear uptrend. What are we going to be looking for? Our key areas is all the way down towards our 586. So we know that this is a higher time frame point of interest. We're going to be looking for this area to be used as support for that continuation back towards the upside. So as you can see here, as we play out the tape, price is now pulling back down in towards our key area. So the higher time frame is bullish. We have a 5-minute downtrend. If I go into the 1-minute time frame, you can see we have a 1-minute downtrend as well. So what do we have here? We have a higher time frame macro uptrend, and now we have a micro downtrend on the 1 and 5-minute. So now we're going to be waiting for the 1-minute to flip back bullish for a push back towards the upside. As you can see right here, this is where we get that change of character back towards the upside. We break above this swing high. Now what we can look for is all dips to get bought up for that continuation push back towards our higher time frame objectives now. So now we're going to be looking for the retest. You can see price, nice reaction off our key retest level. That's where I look to get in with a stop just to break below. And now I can look to target those higher time frame key levels. So if I move back on the higher time frames, in this case, my higher time frame key level, since we're at all-time highs, is going to be this pre-market high all the way back here. So this is going to be my key area for SPY that I can look to target. Now we can go back and play out the tape. So as you can see right there, SPY ended up hitting my main target, which was my pre-market high, or that all-time highs level that I made in the pre-market. In this case, I actually ended up taking a couple scales along the ways, but I ended up holding my major position for that higher time frame key level. So in this case, it would have netted me $1,800. What I actually made in this day was over $6,000. So now we can continue to play the tape on Tesla to see what it will look like on the next session. So you can see I played the next session towards the next day. You can see we're still clearly in a higher time frame bullish environment. We're creating higher highs, higher lows. We're holding key areas on the SPY. What we're going to be doing is looking for continuation towards the upside, right? We have a higher time frame macro uptrend. What are we going to be doing? We're going to be looking for any sort of micro downtrends to flip bullish to target those higher time frame objectives. So in this case, so as you can see right here, I'm on the 5-minute chart, and I'm going to mark out a couple key levels. I'm going to mark out your previous day highs, and I'm also going to mark out your pre-market high key area as well. In this case, right, as I mentioned, higher time frame, bullish uptrend. We're now looking for any sort of pullbacks on the lower time frames or for any sort of bullish setup for continuation higher. Now I'm on the 1-minute time frame. You can see that price is now using our opening range candle, right? Pre-market high. We're getting above this key area. Let's see if we can end up using this area for potential continuation back towards the highs. So yeah, price, we have a nice break towards the upside. We're getting the buyers stepping in off our opening candle print, off our key area as well. This is where we can look to take price with a stop just to break below. And we can look in this case, right, since we don't really have any targets, since we're at all-time highs, we can target a 1-to-2 risk to reward ratio. And you can see right there, price ended up hitting our target fairly nicely for another win on the day. But let's go on to the next session. So as you can see right here, we're on the next day again, and we're still in a very much clear uptrend in the markets. So if we're in a clear uptrend in the markets, what are we going to be doing? We're going to be looking for long positions towards the upside. Since the higher time frame is still bullish, we're going to be looking for continuations higher. So you can see that coming to market open, the key level that I'm going to mark out is this key area, which is your previous day highs. We can also mark out our key area as well and drag this over. And now we can go into lower time frames to play the tape. So as you can see, coming to market open, this is our key area on SPY. What I really want to see is a break above this previous day high area for that continued push back towards the upside on the overall market. You can see that price is trying to close above this area. What I like to see is some displacement, a retest of this area for that continued push off your 496.65. So you can see we finally close above highs. What we can be looking for now is the retest As you can see, we're getting the retest here nicely. That's where you can go look long with a position off this retest level with a stop just to break below. And you can look to target a 1 to 2 risk reward ratio. So you can see right there, we had another nice win on SPY towards the upside. The structure on the higher time frames was bullish. And now we go on to the lower time frames to look for any bullish setup for continuations back towards the highs. So now let's go on to the next session on SPY. So as you can see right here, we're on the higher time frames. We're still in a very much clear uptrend on the overall market. So if we're in a very much clear uptrend on the overall market, what are we going to be doing? We're going to be going on to lower time frames to look for any micro downtrends, to look for a continued pushback towards the upside. So now let's go into lower time frames. Right here, you can see the key area I'm going to have marked out is your previous day highs. So we're going to be using this area as a potential move back towards the upside. Coming into market open, so you can see price is now tapping into our key area, which is your previous day highs. So we'll be looking for potential continuations back towards the upside. So right there, we can look for a position off our key area, right? Nice reaction off this area. Stop just to break below. And in this case, we can look to target your pre-market highs back towards the upside and drag this up. Now we can play out the tape. You can see right there, we would have ended up getting stopped out for a loss. In this case, this was a super solid setup. This was higher time frame bullish. You had a nice strong reaction off your previous day highs, right? You're looking for continuation towards the upside. In this case, you're up 3 days in a row. Fourth day on SPY, you're bound to take a potential loss in this case, but this was a super solid setup. And now let's go on to the next session. As you can see, we're back on the higher time frames. We're creating higher highs, right? Higher lows, higher highs, higher lows. But in this case, what we have on the previous day is we actually broke underneath this key pivot point. So now we have to be very careful and we want to wait for extra confirmation that price wants to continue back towards the upside. So now let's go on to the lower time frames and we can mark out key areas. So I'm on the 15-minute time frame and we can refine our key areas now. So price, as I mentioned, we have to be fairly careful because now we're not above our previous day highs on SPY. And our key area now really of our level of support is all the way down towards this 596. So we can drag this level, refine our key areas and mark this out, which is our 496, multiple touches around this area. So what we want to be doing is really looking for price to come back in towards this level for potential kind of positions back towards the upside on the higher time frames. So let's go into the 5-minute and see that price is pushing towards the upside so far. What we have is a pretty big candle underneath your opening candle range low now. So what we can be looking for on the 1-minute time frame is a potential retest of this area for a quick scalp towards the downside. So what this is right now is we're looking for an intraday bearish setup to target those higher time frame key areas. So now let's look to see if we get that retest. Price coming back to retest this area. We'll wait for weak price action. You can see we get that weak price action off our key area. That's where we can look to go in short with a stop just to break above, and we can look to target low of day and continuations down towards our key areas on the higher time frames. Now play with the tape. And you can see right there, price ended up tapping into our higher time frame point of interest fairly nicely, where we would have ended up closing our short position because that was a higher time frame point of interest level. I hope you guys enjoyed that video. If you did, I'd appreciate it if you guys drop me a like and sub. If you guys want to follow me for more live market updates, follow me on my Twitter and my Instagram handle down below. And I'll see you guys next week for a brand new video. Peace.